Hello, and on this episode of the Mortgage and Protection Podcast, Paul is here from Henchurch Lane to explain how the new build mortgage process works if you are self-employed. Welcome back, Paul. How's it all going?
Very well, thank you, Tess. How are you?
Oh, that's good to hear. Yes, I'm all good too. Glad to be
Good.
back to answer some more questions. Well, you'll be doing that, not me, but
Exactly. Yeah, I'll take care of that bit.
you'll take care of that. Right. Let's look at the first two questions combined then. So, can I get a mortgage on a new build property if I'm self-employed? Is it hard to get a mortgage on a new build if you're self-employed? So, any differences here?
Okay. So, firstly, can you get a mortgage on a new build? As a self-employed person, yes. Some lenders may restrict your loan to values. So that means that the percentage of the purchase price that you need to put down as a deposit could potentially be larger. But most still offer loans for people buying new build properties despite being self-employed. So that's not the deal breaker. Some lenders you might need a bigger deposit as a result of being self-employed.
Mm.
However, if you're looking at the higher loan to values, so what we refer to as the sort of 95% loans or 5 or 10% deposit options, you're potentially just left with less or a smaller pool of lenders to look at. So I'd say, other than that point that I've just explained, other than potentially needing that larger deposit, the only additional hardships as a result of being self-employed is purely based on the fact that as a self-employed applicant, it is more difficult, but that's because of the self-employment type. The property type isn't really the difference in that situation. In isolation, it's not going to be the property or the fact that it's a new build. It's going to be the fact that you're self-employed that the reason behind you're finding it a little bit more difficult to secure the mortgage.
Right, okay. So that makes sense there, but we'll continue. So the next question follows on from that, really. So, can I get a mortgage on a new build with only 1 year of self-employment?
Yes, you can. So what I mentioned earlier with having a few less lenders at your disposal really comes into play when you're working with one set of accounts. So most lenders are going to require two, and in some instances, even 3 years worth of trading before they're looking to, happily accept self-employed applicants. So if
Mm.
you're bringing one set of accounts to the table, you're going to be leaving yourself realistically with a handful of what I would refer to as prime lenders. So you're not just restricting it a little bit, you're restricting it quite a lot when it comes to that one set of accounts. That there are lots of, I say lots, maybe 10 to 15 specialist lenders out there that are going to be happy with one set of accounts. But what
Mm.
that means for you is that obviously the rates are going to be higher, the fees are going to be higher, the turnaround times are going to be much longer as well. So in this instance, what you really want to be doing is strengthening the remainder of the case as best you can, right, within your control. So
Mm.
if you can have a larger deposit, then you need to be focusing on that. If you can have all of your documents in order and everything easily accessible, all of your ducks in a row as a bigger picture, and that's really going to strengthen your chances of it being, as easy as possible. What
Mm.
I'd suggest is chatting things through with your accountant, ensure everything looks tidy from a HMRC perspective, and make sure they're going to be willing to, if needed, if required by the lender, giving or providing some sort of projection for the future year. Because if a lender doesn't have any long-term history, they could potentially say to the accountant, well, look, how is this looking on a projected basis? If they're
Mm.
happy to provide that based on their relationship with you, then that's really going to go a long way from an underwriting perspective. It's just going to help the underwriter see that it's going to be sustainable and affordable for you going forwards.
Mm.
And it's going to help as well, sort of backwards. You haven't got that historic, submission to HMRC, but if you've got a track record within that industry, that's going to be something that adds to that as well. So
Mm.
if you have hopped from one industry into a completely different industry and you've only got 1 years, you can't get a projected figure. It's going to be difficult for the underwriter to build a case around that. So it's worth just bearing those other factors in
Mm.
mind, I'd say.
Yes, definitely some key pointers there to take away from the episode. So let's look at this question then. So, my most recent year's earnings were less than my average. Will this affect my new build mortgage application?
Okay, so if your self-employed income is on a downward trend, then the best outcome really is that the lender will use the latest year's figure for the affordability calculator. So let's say your profit went down from 50K down to 40K in the latest year. So the latest figure you got is 40, which is 10 grand less. They're not
Mm.
going to average that out. They're going to use the 40 grand and they're going to put that into the calculator. So, you know, it's still good. Obviously, if there's a huge difference or huge disparity or downward trend, then there could be more questions around that, around the sort of the reasoning and the justification behind those big differences. So yeah, it's not the end of the world if your profit's on a downward trend. It's quite common, if you've had a year where you had much bigger expenses, or you didn't work as much because you had a child or things like that. It's all about the sort of the background information and the justification behind the difference in the figures, basically.
Right, okay, so that makes sense there. Now we've got a popular question here, but two combined. So, how much can you borrow as a self-employed person? How many times my salary can I borrow for a mortgage on a new build property?
So it still surprises me that people think that they can just multiply their income and get a loan amount with a new lender, but it definitely
Mm.
is the case. It's not really that straightforward anymore, unfortunately. Yes, there'll usually be a multiple that each lender will apply to your income, the income amount that you're giving them, and that's going to kickstart the sort of maximum borrowing amount. But essentially, two people with a £50,000 salary could be left in very different positions when they've paid all of their commitments and all of
Mm.
their expenditure. So that's not a very good way to gauge an affordable loan from a lending perspective. So lenders are, of course, going to start chipping away at that maximum loan subject to your individual circumstances.
Mm.
Um, Now, lenders will offer multiples in the background that can range anywhere from sort of 4 times your salary to 7 times your salary. But the way that they look at each individual expenditure and the way that they chip away at that loan is going to differ across the board. Okay, so I would say if you just applied a multiple to your income because that's what the lender offers, I would bet my bottom dollar that once you go through an affordability calculator with them, it's never going to be that figure. So I
Mm.
suppose the takeaway there is chat with someone who can actually do a whole of market affordability calculation for you, and
Mm.
they can show you from the least generous all the way up to the most generous lender based on your full situation. So you know exactly where you stand rather than throwing these sort of, you know, multiples at your income, which just don't really
Mm.
fly anymore, I'm afraid.
Right, okay. Well, that's useful to know there. Again, something to bear in mind. So just following on from that, then we've got two questions again. So, what mortgage deposit do I need if I'm self-employed? This is interesting. Can I use my self-employment grant as a deposit towards a new build property?
Okay, that is interesting.
Mm.
So what deposit do you need? Let's start with that. There will be options for self-employed applicants to buy new build properties with as little as 5% deposits. So that's the headline. I'd say if you can get to 10 or even 15%, then you need to be aiming for that. But if you've only got 5% and you've got no options to look to increase that, then have a chat with a broker and they're going to be able to take a view on your situation, let you know what your options are at
Mm.
that stage and what needs to change if there aren't any options to get you where you want to be. With regards to the self-employed grant side of things, we're probably getting into muddy water there.
Mm.
I wouldn't say yes or no, but I would say it's on a case-by-case basis. So again, go to a broker with your specific situation, have a chat with them, and they're going to let you know exactly where you stand. If I said yes, you can, then people are probably going to be disappointed.
Mm,
And if I say
yes.
no, you can't, then people are like, oh, there are certain instances where you probably can. So yeah, it's a difficult one to answer, but it will
Mm.
be specifically down to your set of circumstances. So get on the
Yeah.
phone to someone who knows how to figure that out for you.
There we go. Okay, so we've got two or three questions left. Let's look at this one. So, again, you might have touched on this slightly, but how will
Hmm.
you be assessed as a employed mortgage applicant looking to purchase a new build property? So, anything else to add there?
Not really. So this really, again, in isolation, is not going to be the new build. I suppose
Mm.
we've touched on the potential fact that you might need a larger deposit, depending on who you're going with. You might well be left with a smaller pool of lenders. But you're realistically, once you've got that pool of lenders, you're going to be treated the same as any other self-employed applicant, regardless of whether or not it's a new build. So, you're going to need to provide the required evidence, and you're going to be going through a affordability calculation, and there will be then a valuation that is instructed, or a survey instructed on the property, to make sure they're happy with not only you and your income, but also with the security, which in this instance is the house that you're looking to buy.
Right, okay. And with all that in mind, that leads us nicely on to the next two questions. How will a lender calculate my self-employed mortgage earnings? How do I prove my income? Popular one.
Yes. So from a self-employment point of view, naturally that comes with having to submit tax returns to HMRC. When you submit your tax return to HMRC, you do that normally on a personal basis, April to April. And that will then generate what's called an SA 302, also known as a tax calculation or a tax computation, depending on where you get it from. That's almost like, I refer to that as a bill from HMRC. So it breaks down all of your income and it gives you a tax bill at the bottom. Once you pay your tax, that spits out a tax year overview, which is effectively like a receipt. So you get a bill and a receipt for every year. It's like a pay slip, but for a self-employed person, and you only get it once a year instead of every month or every week. So they're the main things to provide income evidence from a self-employed applicant. If you are a limited company, again, you're going to be viewed as a self-employed applicant as well. And that's going to come with company accounts. So not only do you need to provide your income proof, you're going to need to provide income proof of the limited company. You're then going to have to follow that up with bank statements, personal bank statements, company bank statements, potentially if you've got a company, and all of the ID verification, passport, driving license, deposit proof, and anything else, as long with the kitchen sink that the underwriter might throw at you. But they're the main things that you're going to need to bring to the table to figure out where you stand.
Okay, so there's a list there. So preparation is key. I know, again, I say this probably on every episode we do when we cover self-employed, but preparation is key, isn't it? Okay, so we've covered all of the main questions there from what I can see. So let's end on this note, as we always do. You've demonstrated how a mortgage broker can help, but have you got anything else you'd like to add there?
I suppose, how can you help? If you've asked any of those questions or you didn't know the answer to any of those questions, then the mortgage broker is effectively going to be able to specifically break that down for you based on your set of individual circumstances. Because what people might realize is that most mortgage questions that are answered can be somewhat ambiguous. And it's not because I don't know the answer or I'm pretending to know the answer. It's because it is going to vary depending on who the applicant is. So, it's a bit of a minefield. And I would suggest making sure that you're doing things in the right order. The very first place to start when you're looking to buy a house really is working out whether or not it's affordable. And the way that you do that is by picking up the phone and speaking to someone who knows what they're talking about. And if you are self-employed, try to find a broker who is more directed towards that kind of expertise rather than just a generic broker that kind of does vanilla cases. It's not as simple as that. It's realistically the difference between going to your GP and going to a consultant. So your GP is going to know a little bit about everything. Your consultant's going to know a lot about that one area. And I would say that's very similar to a self-employed mortgage situation.
Okay, a good analogy there to end on.
Thank you. Come up with that on the spot as well, Tessa.
Pretty good going there, I think. Hopefully that's proved useful then to anybody watching this, listening to this. And Paul, I'm sure we'll be back with another episode soon, won't we?
Yes, I'm sure we will.
Catch you then.
Speak to you soon.